You're live. Good morning. It's good to be here again. Good morning. Invite a guest, you're live. ProFx is here again. If you can hear me, if you can hear me, if you can hear me, if you can see me, indicates on the chat box. So I will start asking questions of where are you joining us from. I need to know who I know is joining us for this session. So if you can hear me, tell us where you're joining us from. I need to know my audience. So where are you joining us from this morning? Tell me. Where are you joining us from this morning? Okay, where are you joining us from? Let's have it. So I've got feedbacks from some persons that they don't understand what we do here. So I first say that this is not a class. We have a mentorship class where we break down every concept. All right. So what we do every morning here is analysis and execution. Okay, analysis and so. But if you are coming in for the first time, just observe. Just observe. So we are showing you how we actually take our trades, analyze, manage our emotions, all of that. So this will now prompt you into getting the mentorship. Okay. So I want to always know my audience. Where are you joining us from? If you are new to the community, if you are new here, type in I'm new, type in yeah, thank you. Thank you, sir. Yeah, and seeing clearly. Right. So I would want to always what was it I was saying? Okay. I want to always use the first 15 minutes to just do basics. So if you are a beginner, so you will be able to relate with us. But this is not a class per se, right? So just take notes. Any jargon that seems Chinese to you, just take a note, right? You can ask the questions in the class or you have to come in for mentorship. Okay, so like I said, let me know your location. Where are you joining us from? Let's know. Where are you joining us from? I have an amazing story to share with us this morning. Something very amazing. If your guests are not here yet, I don't know. So, as a basics, I want to believe that we are all here. The attendance is quite low. For now, Lagos. Yeah, very soon. You see, joining from Dubai. I want to be seeing things like joining from Cyprus, joining from the UK, joining from Maldives, that kind of thing. Yeah, very soon, very soon, very soon. Yeah, me safe. I'll be streaming from Cyprus very soon. So now it's looking like my Cyprus dream is coming to reality. My Cyprus dream is coming to reality. One of my vision is to have my office just in front of a financial district in Cyprus. Like I want to be facing, we have district in the UK, in the US. We also have in Cyprus. So one of my vision is to have my office facing one of the districts in Cyprus. Bam. So having an offer with a Cyprus based, so the CEO of Investo based in Cyprus, right? It's not a coincidence. And the boss that enrolled me into Investo is also based in Cyprus. So the world is becoming flesh once more. All right. So in 2 years from now, I'm on a Cyprus. So I'll be streaming from Cyprus. Hello, Nigerians. How are you doing? Uh, on a lighter note. So if you are joining in, tell me where you are joining in from. Let's have it. Let's have it. Let's have it. Where are you joining us from? What part of the world are you joining from? What part of the world? And if you are new, let me know you are new, so I'll know how to be able to, tone down my professor language. So it should not be too. I will not be too professional, right? I need to know. If I don't get any response, I assume that we are all experts, so I'll just fire on them. I should fire on Abby. Okay. So I'll come back to the comment section once in a while to look at what you guys are saying. All right. Let me type in live here. I'm going to use the first 15 minutes to just do basic stuff. So we now go to the chat so that we carry everybody along. Okay. Okay, so back to the basics. Back to the basics. Back to the basics. Now, when it comes to the market, there are two things that we are looking out for. Back to the basics. Number one, our trading concepts. And number two, our trading strategy. So I always tell my guys that it always starts from what? Trading concept. Before you talk about applying any strategy, you must understand the concepts behind your strategy. First question: what are the concepts that's comprised of your trading strategy? You need to know, because it's when you understand these concepts one after the other, you now bring them together, you can now apply it on a strategy. So that's why you see that you can have different strategies but the same concept. It means that I can teach you what demand is, what order block is, what structure is, but when you come to the chart, you now be able to formulate your own strategy. It happens that way. So I'm much more big on concepts than on strategy, because you will not eventually approach the market the same way. We agree. If you agree, type in I agree. That we will not ultimately see the market in the same light, because our lens. So I have a funny saying that says, if our lens on our eyes is different, how will we not see market differently? We don't have the same eye lens. We don't have, even a twin. I believe so. Even a twin does not have the same eye lens. Or yeah, I believe so. So we can't eventually see the market the same way. Someone is seeing buy, someone is seeing sell, but we are both correct. You understand? So it depends on but the first and important thing you cannot joke with is understanding and mastering your concepts. If we are together, typing we are together. Exactly. What you cannot deny is understanding your trading concept. So, as a beginner, if you are listening to me, a beginner, your first job is to understand by definition, by purpose, and by application. Tell again. Your concepts by definition, that means you want to know what is your concept, what is demand, what is structure, what is supply, what is order block, what is fair value gap, what is liquidity. So the first thing is what? Definition of your concept. Write that out on the chat box. Definition, you want to know what your concept is. Definition. Number two, why should I use demand? Why should I use supply? Why should I use order block? Why should I use structure? So number two is you want to understand the purpose or the reasons why that concept is important. So number two is the importance of your concept. One is definition of each concept. One is definition of each concept. Two is importance of each concept. Then number three is application of each concept. If I'm making sense, type in making sense. This is basic stuff now. Before you come to strategy at all. First, definition of each concept. Two, importance of each concept. Why is Fibonacci important to me? Why? Why should I care about Fibonacci? Why should I care about candlesticks? Why should I care about liquidity? Why should I care? Why? Why order block? Why fair value gap? Why demand? Why structure? Question things. Ask questions. Why should I care about change of character? Then finally, application of each concept. How can I apply demand on the charts? How can I apply FVG on the charts? How do I apply break of structure? How do I apply change of character? How do I apply Fibonacci? How can I draw them on the charts? Can I be able to spot a demand? When I see a demand on the chart, can I say this is a demand zone? Can I say this is a break of structure? That is what will lead you into application of your strategy. Definition, importance, application. Let's go. Everybody type in that. Definition, importance, application of your trading concepts. Everybody, let's go. Let's go. Definition, importance, application. So if you are a newbie in the house, this is where we start from. Before you get to the application of strategy, you must first understand. So there's a quote I'm looking for that I did one time ago. I said, if you could understand, let me quickly check that quote. I've been looking for it since yesterday. If I could break down everything that goes into trading, fair enough, if you can find that design for me, send to me now. Where I said if you can break down everything that goes into trading and bring them together, you make a significant improve. That particular quote, I'm trying to if you can break down everything that goes into trading and bring them together, you will make a significant improve when you put them together. I'm looking for that quote. Okay, I've seen it. Yeah. I've seen it. I will send it to our Telegram now. I did find this thing since yesterday. I don't see them. So let me send it to our Telegram, and I'm going to show us right here on helpful tweets. So the goal is 1% daily improvement. 1% daily. So I want to improve on mastering my trading concept just by 1%. That's the goal. 1% daily improvement. So I'm sending it to the group now. So check it out. Look at these quotes. If you can see it, you type in, I can see it. If you can see this quote, Type in, I can see, I can see, I can see. I said if I could break down everything I could think of that goes into trading. Now, this is our trading concept. What are the things that goes into my trading concepts? So I'm saying significant increase when I put them together. Write this on the chat box, everybody, quickly. If I could break down everything that goes into trading, in brackets, trading concepts, and then improve it by 1%, I will get an increase when I put them together, in brackets, strategy. So what we are doing is we are breaking down everything that goes into trading: market structure, demand, order block, fair value gap, liquidity, Fibonacci. Break it down. The next step is to now improve on understanding definition, importance, application by 1%. Now, I want to give you a reality check. It will take time. The time now depends on you. I won't tell you that I've seen my students in 3 weeks get the knowledge, some 4 weeks, some 1 month, some 2 months. So the time varies on how you grasp this thing. But don't beat yourself. Just focus on improving on your concepts. You might even achieve your goals lesser than you envisioned. So don't ask yourself, when will I become profitable? Don't ask yourself, when will I understand this thing? That's not the question. The question is, my screen is not showing. My screen showing, everybody. Is my screen showing? Why is my screen not showing? I don't get. Okay, that's network. Oh. I'm tired of this guy, man. Okay, can we see it now? Yeah. So I'm saying that if I could break down everything I could think of that goes into trading and improve it by 1%, I will get a what significant increase when I put them together. So this breaking down is the trading concept, why the all together is the strategy. So as a beginner, your question is not when will I become profitable, or when will I start making my first 1K dollars, or my first $100. That's not the question. The question is, do I now understand what is structure, why structure is important, and how to use structure? That's the question. When I understand what is demand, why is demand important, and how to use demand, those are the questions you should be answering. Naturally, you get to your money goal. So, like I always say, money is a natural consequence of mastery. So your job is to just focus on what the mastery, the process, and you'll get what the profitability naturally, naturally. So that's just a sidebar for beginners. Okay. So everything we are doing here is we are now applying all the concepts we have put together in the class. So for us to understand the concept, you have to come to class. We break down the concept one after the other. We are just coming here to apply all the concepts we have put together. So if you're a newbie, if you're a newbie, Exactly. Money is natural concept. Consequence, not concept. Consequence. Consequence. Money is natural consequence of mastery. Consequence, not concept. All right. So if you're a newbie, you don't miss our first 10-15 minutes, because the first 10-15 minutes is where I'll do the basics. If you're coming in by 7:30 or 7:45, you're going to meet chat, and you'll be confused. So always meet up with the first 5-10 minutes, because that's how I'm going to pick out. I'm going to do the basics. All right. All right. So let's go. Yeah. Let's go. Um, let's go to the chat right now. So we had an amazing time yesterday on gold. I sent the setup. I sent us the setup. I believe we took advantage of that setup. So gold was a 2 days. We held the trade, right. Let's start with gold. Let's start with gold. So what we did there was very, very simple. Gold gave us a very simple structure. Okay. Let's break it down. 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 So we have said that we have marked out our what? Our weekly range, right? Monday high, Monday low. And we saw that from Monday to Tuesday, we are already having what here? Monday and Tuesday. Monday gave us a what? A very big expansion. Okay? So we missed this Monday's move. Bam. All right. So we started from what? From Tuesday, and we sold and held to yesterday's sale. So what did we see that made us sell on Tuesday and keep on holding till Wednesday? What did we see? Waiting we see we make us sell for Tuesday and held it till Wednesday. Waiting we see. So structure plus liquidity, first and foremost. Like I said, the three things day traders should not joke with. One, timing and sessions. Two, daily high low, previous week high low, blah blah blah. Then three, structure plus liquidity. So according to the structure, we have a break of structure, and this is 1 hour bearish lower low, and we expect that there will be a pullback, right? And that pullback should take out inducement, liquidity, liquidity. There we have inducement. Okay. Step two, liquidity. Step one, structure. After that, we expect a pullback into an area of value of fair value gap or what other block. And dropping down to 15 minutes, we saw that there was a breaker block plus a fair value gap just right after the inducement. And that was our sell signal. That was the sell signal we had. So we saw after the inducement, this is a breaker block plus a 15 minutes fair value gap. That was all we needed to see. Okay. And why I'm saying this again is because patterns will always repeat itself. Market is about patterns, trends, and similarities. The market is about what? Patterns, trends, and similarities. We are doing three things in the market. One, we are trying to memorize patterns. Okay. Two, them to repeat itself. Then three, execute. I've said this over time. What we are doing as technical analysts is we are memorizing patterns. So let's write that out in the chat box. 3 steps. One, as a technical analyst, we are what? We memorize patterns. memorize. You cram, 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 cram. Memorize patterns. This is your job as a technical analyst. 2, wait for them to repeat. Then 3, execute. Execute fearlessly and flawlessly. Write these things out in the chat box, everybody. As a technical analyst, this is what you are doing every single time. Because when you have a trade that gave you a profit, it means that that pattern worked. Whatever you did that made you that money, if you can repeat that thing over and over again, you keep on making money. Is that clear? As a technical analyst. As a technical analyst, memorize patterns, wait for them to repeat, execute fearlessly and flawlessly. This is all you are doing for life. For life. Now, this pattern will happen here. It will repeat itself again. Now, this happened in 15 minutes. This can happen in 1 hour. It can happen in 4 hours. It can happen in 3 minutes. Can you see my screen? Write on the chat box those 3 things that TA does. Can you see my screen? Is my screen showing? Can you hear me? I have to be. Okay, great, great. Thank you. So, what does a technical trader do? What does a technical analyst do? Write on the chat box, everybody. What does a technical analyst do? Write on the chat box. What does a technical analyst do? What does a technical analyst do? Very clean setup. Very clean setup. Very clean setup. And this is almighty gold, though. So when I tell you guys that it's not about the instruments. No instrument should be to scare you, whether it's gold or US oil or Nasdaq or Bitcoin. It's the same thing. Patterns, trends, similarities. Just master that particular instrument. Gold is sent to the village. You say send gold to where it's coming from. Why should you send it to your village? Eh? Why should gold be sending to your village? It's mastery. It's because you've not mastered gold. That's why you send it to your village. Carry your bag and come back to the city and give it the work it takes. So XAU classroom. Okay. The job of a technical analyst. Okay, is that clear? I'm only seeing one person responding no. All right. So let's move on. So we saw that this happened. Our first entry was here. Okay. Now you can see that we have multiple entry models here. So if you are entering from the very, 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 very start of the other block, that means you are entering from what the middle line of the pixel line. You will have been on the trade, right? That's we call this risk entry. Entering a sell limit at your what location, risk entry. Okay, that's the first type of entry. But for a conservative entry, what do? You wait for a what? a breakout and what retest. This is risk entry. Risk your sell limit at your what location of fair value gap or order block. Why for conservative entry, you are waiting for a push out and a pullback into what the origin of the what risk. In that case, the whole entry will be what will be here. Okay, but people like us, we do two of them. We do both the risk entry and the conservative entry. You know they leave money for table. So you enter at the risk entry first, all right, and enter the conservative entry. You understand? So if this one takes us out, no wahala. Wait for it to break out and retest. Do you see now? So is that clear? Two types of entry: risk entry and conservative entry. When price taps into your POI, you have two types of entry. I repeat, when price taps into your POI, we have two types of entry. We have the risk entry and the conservative entry. It's where you enter straight your sell limit from the order block or FVG and your stop loss above. While for conservative, you are waiting for a what? A breakout and a pullback or a candlestick close. That's conservative entry. And I said that to me, I use two of them. All right. So it depends on you. So after seeing that Tuesday did not give us the whole move we were expecting, Wednesday came again. Wednesday we had the same thing. Because I saw that we had this structure yesterday. Yesterday. So why did we do this yesterday? We saw that there was a new break of structure. Market will always do its thing. Structure plus liquidity here. Internal break of structure. See a pullback into the what order block after an inducement. Similarities, patterns, and trends. Where is the inducement? Brother and sister, this is the inducement. That high was taken. So again, similarities, patterns, and trends. Memorize patterns, wait for them to happen again, and what execute. Simple. How hard? Okay, now talk to me. How hard is this I just said now? How hard is this I just said? So what will be hard is now that go and back test so you can memorize the pattern. The hard work is now for you to memorize the pattern. That's the hard work. Because as far as you have mastered and you can now spot these things, they become simple for you. You just wait for them to show up and you what execute. SL or Lambo. No time. And today we have a what massive drop. I will come to our Fibonacci to see how to know. So where do we take profit? That's the next question. Where do we take profits? Where do we take profits? Next question is what? Where do we take profits? All right. Now I will give us our take profit protocol. So let's take notes. Where do we take profits? Let me list out our take profit protocol by the side. Are we sure we are fully? I'm only seeing one person responding. Are we together here? Are we together? Take profit protocols. Okay. Now, when you are buying, I will give for buy scenario and for sell scenario. Buy scenario and sell scenario. Where to take profits when you are buying and when you are selling. Okay. Buy scenario and what? Sell scenario. All right. So for a buy scenario, where do you take profit? For a buy, if you are buying, you take profit at one, at supply. Okay. You take profit if you are buying at previous session high. All right. You take CP at what? Previous session high. All right. Then you can use feed extension. Okay. On the other side, if you are selling, you take profit at where? At demand. Demand. You take profit at previous deep extension here too. Okay. So basically, this is like majors. So if you are buying at supply, you take a profit. If you are selling at demand, take profit. Also, if you are buying or selling too, for a buy, previous session high. For a sell, previous session, then fib extension. So let's take note of this. All right. Full screen takes off the chat box. I don't get what does that mean? Full screen takes off the chat box. How does that mean? I don't get. What does that mean? Okay. Say that again. I'm not using phone. I'm using system. I'm using system. Or the how do I bring out this guy now too? Unless if I have my phone on and also my okay. Let me have my phone on. If I connect to my phone and also connect to the YouTube on the system, I can see on both ends. Okay. Yeah, I think I'm good now. So I can see what's happening on my phone and what's happening here, so I can end up I'm following. All right, so we have this protocol for take profits. Now, you take profit at higher time frame. Note that if you are entering on a lower time frame, you are taking profit at what, a higher time frame. So let's look at this scenario of our sell. When we are selling gold, where was our take profit? So if you are selling on 15 minutes, go to 4 hours. Can you see? On 15 minutes, we enter sell, we go to what? 4 hours, and look for demand zones to take profits and see what we saw. Let me hide everything here. Now look at the selling. Can you see? This is the demand zone here. Very well, you can see we started selling from here. We have to take out this liquidity when we are selling. Okay, we have to take out that inducement. That's a liquidity target. Okay, for a sell, liquidity into where demand. So our take profit was to be this demand zone, that red candle before the green candle. Okay, or we call it order block. That was the take profit. So imagine you holding your trade from this Tuesday sell to this demand because you are aware of where price is going to. Do you understand now? So if you are entering on 15 minutes, your take profit will be on a 4 hours higher time frame demand for a sell. Okay, if you're entering on 5 minutes, your TP should be on 1 hour. If you're entering on 1 minute, your TP should be on 15 minutes first. So this is what we have currently on gold. So gold now has gotten to this demand. We can't be selling gold now. Yeah. We can't be selling gold now because it goes at the demand 4 hours. So most likely there will be a pullback or a change of character to buy. So two things are going to happen on gold now. Either a pullback to continue selling or a change of character to reverse this trend. Right? So let's go back to the drawing board. Let's go back to the drawing board. Let's see what the data is saying. So for me, I believe gold still wants to drop. I believe gold will still drop. I believe gold is still drop. Where is gold dropping to? Gold is dropping to this base. We have a drop base rally. Origin of this base. So mark this chart. Okay. Gold is I'm just following structure. All right. I'm just following structure. This is the origin of this break of structure. So and gold loves to come into origins a lot. Gold loves to come into origins a lot. So this is an origin for daily time frame. All right. Origin for what? Daily time frame. Daily time frame. We have seen that on daily time frame, this is what inducement. Time frame, that is the inducement. On daily time frame, that's the inducement. Now, if we draw our Fibonacci from swing low to swing high, let's see the retracement of Fibonacci. Not there yet. Okay. So we can see that our demand is sitting exactly at 8.6. Our demand is sitting exactly on 88.6. This is not a coincidence. This is not a coincidence. Okay, mark out. Let me screenshot this guy. And so I'm still expecting more drops for gold. All right. So I'm still expecting more drops for gold. So today has already given us bearish vibe. Today's candle has given us bearish vibe already. Can you see? It has dropped very bearish. So let's see what we can do. Now let's do our daily bias. Okay, before we go down to 15 minutes. First of all, see what let's look at yesterday's high and close and low before we come into today. Let's do a quick recap of yesterday, then we come to today. Okay. Previous day high, previous day high, previous day close, and previous day low. All right. Then you go to 15 minutes to expand and see what this guy wanna do. So this is yesterday, just yesterday that we are looking at. So we have yesterday being Wednesday, starting here, ending here. And I always say you are doing your previous day high and low with the context of what structure. You're not doing it blindly with the context of structure. Because this PDH and PDC, you need to know the direction first, then location, then confirmation. All right. So from the location, from the structural point of view, we are structure. Like we said that we have already seen that these are other breaker block, okay, for the previous day, respecting a structural move. And on that day, we now have a what break of structure. So in this case now, where we opened, we just saw a little outside previously closed, then back. So these are confirmation for itself. I'm using previous day as a bias now to know what the day will do. Below previous day close and a pullback at the other block. Previous day high, close, and so it gives you the bias of what the day will do based on the structure, right? So this is for yesterday. Let me just do a screenshot on this. I love doing my screenshots because it helps me to review my winning patterns. Okay. Yeah. So this is what we have for yesterday. All right. So today we are already bearish. Today we started bearish. That means most likely the bearish trend continues. Most likely the bearish trend continues. We just need to wait for a pullback into a good location and continue selling. Are we together? If you're together, type in together. If it's clear, type in clear. Are we together? Is it clear? So let's look at what we have for today. Let's delete everything again. Let's see what we have for today. So we go back to daily time frame. On daily time frame, I mark my what the previous day candle. Previous day candle closed bearish, right? I mark the high, the low, and the close. All right. So I mark the I, previous day I, previous day I, previous day low, and previous day close. All right. If you want to know why we do this, now that's look at this concept is called what? Previous day, previous day bias. So why do we? So that's what we talk about in the class. We break down the concept of definition, importance, and application. Okay. So it's not because we like previous day high or we like previous day low. We are using it because we know it is important. It helps us in our analysis as an edge. Okay. So that's why we use it. So in the class, we explain in details the definitions and the application. All right, here. So let's mark out the start of today and the range of today's day, and we take it up from there. Thursday, end it here. So I bring out this my fine boy into the current section. All right, good. I bring out this guy, previous day close. Good. I bring out this guy, previous day low. Now, what it's telling me is that the high of the day has been declared. The high of the day. So what price did to this price action? According to what I'm seeing here, the high of the day has been declared. Unless if market wants to do otherwise. Now, where market opened, right? That's what manipulation. Then what? It's not distributed. So we have a break of structure here. And this above previously close. If we check your daily candle, our daily candle, now watch. This past action, look at daily candle. Watch. Let me hide this and go to daily. Look at my daily candle. Can you see daily candle? Daily high has been. So it means that when price closed here, it opened here and went up and what now starts selling and is rejecting. So according to this candlestick now, if price does not change sentiment, the high of the day has been declared. All right, the high of the day has been declared. Price closed there, price opened there, price first distributed below is now pulling back. So we now want to enter sell at the other block inside that place. Inside the other block. Do you get now? So 30 minutes, you're back. You're back. So like I said, we have declared the eye of the day. All right? We have declared the eye. That is this guy. Eye of the day. So this is our break of structure. So I'm going to wait now for price to this guy inducement into an area of value for a sell continuation. Let's go to 15 minutes. Let's see if we have something there. Okay. Okay, so let's also look at the Fibonacci retracement. As the price is pulling back, we use Fib. If you are confused, during Fibonacci, you have so we can eliminate other blocks that are not useful. It means this guy is a no-no. This guy is below. My screen is not showing. I just saw my face now. Okay, you're back. Can you see my screen now? So this guy is below 50%. So we can't use this guy for our interest point. So this guy is a no-no, right? So it is the other blocks or interest point above 50 we are interested in, which would be this fair value gap here at 61.8. You can see there's a fair value gap here, okay? Or we simply use this breaker block here, breaker block plus what other, right? We are going to have this guy, breaker block again. Can you see breaker block? Can you see breaker block again? So, oh. So let's watch as price delivers this price action on gold. All right. Risk entry says you're going to enter from here, but I want to be conservative because according to this guy now, if care is not taken, this guy might be used as inducement to price can take out that guy, yo, because gold Chris. So I want to wait for a confirmation entry when price taps into my broker block here on the lower time frame to be sure that that guy is valid. All right. Okay. All right. So that's what we have for gold. Oh. So this is what we have for gold, right? So let's go to Euro USD and let's go to GBP USD. This XAU set up. What's today's date? Today is 1505 2005 2025. All right, so let's go to Euro USD. So for Euro USD, similarly, we are going to be using our so let's delete everything again. Let's go back to the basics. So I saw something on 4 hours time frame, which was interesting. The reason why Samuel bought from here. Okay, I saw the reason why Samuel bought from here. This buy. Okay, if you look at the 4 hours time frame clearly, this is a what? Number one, this is a demand zone. One. All this guy here is demand zone. That's one. Okay, demand zone. That's point one. Point two, from the Fibonacci retracement, that was exactly a 2.0 OTE. Look at it from this low to this high. Price is sitting on what? 71%. 71%. That's a 2.0 OTE, and that was very precise. So from 61.8 to 79% is OTE 2.0. If you're a newbie, come to class, you understand what this means. OTE 2.0, OTE means optimal trade entry. Optimal trade entry. So I don't want to go into details. In mentorship, we break this down into bits. So that was what this guy is currently expecting. So I understand what that means. Do you understand now? When price got there, you can either use a risk entry or conservative entry. That means that when price taps into your OTE, you want to go to what? On 4 hours, go to 15 minutes. All right? 15 minutes for a candlestick confirmation or a change of character. That is your confirmation entry. When price taps into your OTE, you look for candlestick confirmation or change of character. And session, yeah, if you are a day trader, session. So for our case of change of character, where is character change? A new break of structure, right? Let's start with character change. 4 hours, 4 hours of OTE, 15 minutes of what? Change of character. Please take note. 4 hours of level, 15 minutes of what? Confirmation. I repeat, 4 hours of key levels, 15 minutes of what? Change of character for confirmation. So break of structure is here and change of character is here. So considering our session, which is just New York. So you can even use this candlestick that closed above 15 minutes candle. Stop loss can be below here, or you wait for price to come back again. But that day is already gone. Okay, wait for the next day. But if you want to still trade a particular day, you can still use confirmation candle for entry. Look at it. This candle that closed on 30 minutes at 15:30. 15:30 is 3:30. 15:30 is what? 3:30. Right? Your buy is there below. Take profit at what? The high, previous high of Fibonacci. So that's what we had. So now we are trying to now respect two things will happen. Either we respect this buy or we keep on selling. So what do we do now? We are going to mark out our structure again. So 1 hour, lower high, lower low. So until price will break this high, we are still bearish. Until price will break this high, we are still bearish. Are we getting it now? So this is our external lower high, external lower low. Follow me carefully. External lower high on 1 hour, external lower low. So we are still having a bearish order flow until price breaks that high. External lower high, external lower low. Follow me carefully. Now, inside this range, we deal with premium, and inside this range, we deal with premium and discount. And as you can see currently, we are in the premium zone. We can't be buying at the premium zone. And beyond that, we are also in the what? 1 hour order block. So it means that now is a good time to sell EURUSD. We sell EURUSD back to this discount, then possibly we now buy again. So it's a good time to sell EURUSD. So we are bearish biased for EURUSD today. Can you see I'm formulating my theory now? Okay, good. We are bearish biased for EURUSD today. Okay? We are bearish for EU today because we are in the premium of the range. We can't buy here. We can our take profit will be at what discount zone. So let's go to 15 minutes. Let me on my Asian range and let's see if we can sell. Where's my phone? Okay. Let me on my Asian range. Um all right, so look at what we have now. Asian I 25 pips, Asian range, right? Asian I has been taken out into we're expecting price to tap into this order block. Okay, this can be a sell scenario in the sense of Asian I is swept into order block for a sell. All right, to confirm this sell, I want to see a confirmation. I don't want to fall victim of yesterday's GBP USD. I entered a risk sell and I was stopped out. So I want to see a confirmation on EURUSD that is ready to sell. When price taps into the order block or from this place now, I want to see a change of character or I want to see a 0, 1. For this sell to continue, I must see that price gives me a 0, 1, 2, 3 on lower time frame. I must see this direction 1 minute or 3 minutes. After seeing this direction, I now wait for a pullback that gives me an inducement what to sell. All right. So this is the pattern I'm looking for to put in my money on 1 minute or 3 minutes. I must see this pattern form here. Okay, I must see this pattern here. On the lower time frame, I must see this pattern. Yeah. If I'm ready to sell, I must see this pattern. So one candle cannot give me bubble. On 1 minute or 3 minutes, I must see this pattern form. Okay? I must see that pattern form on 1 minute or 3 minutes. 1 minute or 3 minutes. Is that clear? 1 minute or 3 minutes. I must see this pattern form. Or 3 minutes. All right, so let's go to GBP/USD. If you have any pair you want to analyze, please send in the chat box. What pair do you want to analyze? What pair do you want me to analyze? So I'll be on 1 minute standby on my EU. Okay? I'll be on 1 minute standby on EU. I'll be on 1 minute standby on EU. All right? Waiting for price to give me a good. So I have change of character here. 1. Change of character here. 2. So I'm patiently waiting for a change of character, and as it's giving me character change, I'm looking out for what it's giving my what direction 0, 1, 2, 3 inducement to sell. All right. As it's changing character, I'm waiting for it to give me this pattern. So I'm very patient. I'm very patient. Right. Very patient. GBP/USD. GBP/USD. Let's go. I'm sure. This guy you don't take my stop loss tire. I don't tire for this guy. You don't chop my stop. You don't. Ah! Oh boy, yeah. You don't chop my stop loss for this GU. Your father. Your father. So, okay. So, it has given us a proper distribution to sell. All right. You can see now it has taken out Monday high properly and given us a break of structure. So this is a proper distribution to sell now. Okay, proper distribution to sell. Proper distribution to what? To sell. So Monday, what? Distribution into what? Into Thursday. Do you see now? Distribution into what? Into Thursday. What we're expecting now is what? Is a sell. We're expecting a sell. All right. Today and tomorrow, sell. Today and tomorrow, sell for GU. A proper confirmation. Let's check if there's a news today. I want to give us more liquidity. Let's see the news today. I want to give us more. So there is a news by core PPI and by 140 Fed pair. So I'm going to be very careful not to trade London because it might be more manipulation for us. All right. So what I'll do is that I'm going to look at the price we want to induce into. So like we have, this is our high and low broker. So let's do the previous day high, previous day low, so you can have a better range. All right. Um, previous day high, previous day low. Okay. So this is for GU. Previous day high, previous day. So previous day did not give us low. They only give us close. So the close and the low are the same. Okay. The previous and the previous day close are the same. We really have previous day close. So let's go to 15 minutes and see what's up. So we are currently trading above the previous day close. Like I said, that could be a manipulation at the moment. So we are not deceived that this is a buy day yet. Okay. So we are currently trading above previous day close, which could be a manipulation at the moment. So I would dare to say that by London Q zone 10 o'clock, we will know the direction of the market. Okay? By London Q zone, we will know the direction of the market. So this is what we have. Previous day high and what? And the close. Our range, high and low. We are in the currently discount. We are never even reached equilibrium. So there might be more inducements to tap into the equilibrium. All right. So let's see how it goes. Let's monitor price action into 9, 10, 11, then preparing for the news in the afternoon. All right. But I want to believe that this is already a change of character from my perspective. Break of structure, change of character. So in this case, it's just the point of interest that we're looking out for. All right. Just the proper, let me use my Fibonacci again. Um,
Sound check, sound check. Sound check, sound check. Can you hear me now? Can you see my screen? Sound check, sound check. Can you hear me now? Can you see my screen? All right, good, good. Okay, just give me a sec. Coming. Right. Is he already back? Okay, so that's what we have for Geo. Expect to see good expected to see good movement. Yeah, that's what I'm saying. So I want to see this guy as a breaker. Okay, okay, then I'm good. Once I see this guy break, is GE clear? So let's do USDPY. So I'm going to be teaching I'm going to be teaching us testing so powerful. Right, I did a back test for the last 3 weeks. This is my first week of back testing weekly wage profile, and it has been massive. So let me just do a quick review. Right, look at it here. Look at the first week. Okay, this is Monday high, Monday low. So Tuesday swept out Monday low. Right, we saw the distribution first year. We break, retest, and on Wednesday we had the buy until Friday. Can you see? Monday accumulated, Tuesday manipulation. Now distribution pullback from Wednesday, they are bullish of Friday, right? Wednesday bullish to Friday. The next week too started. Monday had this expansion. Tuesday swept out Monday's low. Then Wednesday, similarly to breaker block bar pattern. Wednesday, Wednesday, specific timing. The following week too, Wednesday, specific. The following week also, Monday, Tuesday, Monday and Tuesday. By Wednesday, we had a chain of character respecting what this and what from Wednesday to what Friday. So I have discovered a pattern in UJ. Wednesday, type in Wednesday on the chat box. This person does for you. Type in Wednesday on the chat box. So there are some weeks that from Wednesday to Friday, you have the direction. Type in Wednesday on the chat box. Let me leave it there. I just said that. Wednesday, 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 Wednesday. Now we are here now. Has not given us anything yet. We are still in the range as a Wednesday. But Wednesday was what? See how this guy is gonna play out. I'm looking at this guy already in this demand zone. We now take out Thursday buy and Friday buy. But let's still watch. Okay? But this week is trying to be different. This week wants to prove someone else. Okay? But now we have taken out the Monday low. Now we are at this everything here demand. So we will not leave anything outside. But they're still in the range. So it means that they are still respecting. Why is this guy doing like this now? Okay, so this is what we have today on UJ. So we are still bearish until this guy is taken out. So this is the structure, right? Low, a lower high and one lower low. But on this structure, we are in a what discount zone, right? We have taken out this target, okay? We have taken out that target, and we are currently having a vibe of wanting to buy. So I will call this sweep. I'll call this sweep. So you can see that you can take advantage. If you see a early buy signal here, you can start buying on UJ. If there's a high signal of a character change here, you can start buying on UJ. All right, of change of character, you can start buying UJ. Did you I just said? That's what I have for you guys today. So I hope this few words of mine are able to convince you and not to confuse you. So basically, I just want to see a breaker. Okay, I want to see a breaker for this guy to be valid. All right, I want to see a breaker. So I want to see that price will break this block, come back, and what? Boom. Yeah. We can start buying now, safe. Stop loss below. So our first buy is even valid. That means our first buy is valid. If okay, let's do it. I think okay. Let me do something here. Let me do something here for you guys. Let me do something here for you guys. So you can see what can I see here? I can see a very clear there's a gap here, right? There's a gap. Has just been filled with an inducement. That's a valid point. And so once this guy closes bullish on 30 on 1 hour, you can buy here and put stop loss below. Simple as that, right? Simple as that. So once this guy closes bullish here, I'll buy here, put my stop loss below, and my take profits I'm targeting this high. Are we guys together? I is already an inducement, and the rule is inducement candlestick after inducement. That's the rule, right? Candlestick after engagement are first. Our second confirmation is now order block as the origin of the engagement. Order block at the origin of the engagement. So for me, my buy is already valid. I can start loss below the engagement. Okay, let me see